the whole premise is to buy low,
right,
sell high.
It was one point when that $250 that I put in was worth like $10,000.
This is Shannon and Max, and you have tuned into In Our Bag, Winning, Wealth, and Wanderlust podcast. On this episode, we discuss personal investments, including stocks, options, crypto, and alternatives. Travel tools will also be shared. Hello, everyone, and welcome to episode 2 of In Our Bag, Winning, Wealth, and Wanderlust, where we share and explore our unique opinions on sports, wealth, and travel. I am Shannon, and this is
Max.
All right. And today on episode 2, we're going to talk about investing. We're going to actually share some of our own personal investments. So let's go ahead and get in our bag. So Max is going to be up first. She's going to share some of her investments. I believe she's going to talk about stocks, options, and crypto. Right,
yeah,
Max?
Yeah.
Okay.
Yeah,
all right.
Yeah.
So let's go ahead. Go ahead and get in your bag. Let's see what you got to say.
All right. So, first of all, people use investments to generate money or income or wealth. And there are many different vehicles and tools people can use to, and different types of investments people can get into, from real estate, stocks, bonds, crypto. Those are some of the most popular ways. There are also other things like investing in small companies, angel investors, things like that. So I'm just going to talk about a few of the ones that I'm using right now to help, build and generate my wealth. So the easiest way for people to invest, and I think what most people do if they're working, is they use their company's 401k. And with that, I take a percentage of my check every week and invest that into like a mutual fund. The company or the government matches a certain percentage of that. And then you just sit back and watch it grow. Of course, it's, you can determine the type of funds that you want to invest in. Most 401ks have options and people can take a look at the different plans and programs. But that's probably the number one way that most people do invest and try to grow their wealth. And I think if you do, have a company that offers a 401k, especially if they are matching,
definitely, matching.
You have to put in at least up to what they're matching. It makes no sense not to. It's like free money. So, in addition to that, people invest on their own in stocks, and will have different types of brokerage accounts. So I, invest in different types of stocks. I have a Roth, IRA account. I have a general brokerage account, and I have a couple of accounts, but the two that I probably, pay most attention to and are most active in is my Roth. And then I use my Robinhood account. With my Roth account, what's good about that tool is that the money that the gains in your Roth are tax-free. So once you reach whatever the retirement age, I guess, is like 65, you can withdraw from your Roth without having to pay taxes on those gains. It is a limit on how much you can put into the Roth a year. I think right now it's $6,000. So I actually try to max that out every year. So I'll deposit up to $6,000 in my Roth. And then all the gains that I make in that Roth are tax free. So that's actually, free money because, other than that, you get taxed heavily on money that you make in the stock market. Capital gains taxes. So those are taxes where if you buy a stock or a stock option and you sell it in less than a year, you're paying capital gains tax, which is almost probably up to 50% of the gains that you make from that. So you got to keep that in mind when you're investing too, because Uncle Sam is always going to get his money too. So that's why a lot of people will try to buy stocks and hold them for at least a year to avoid paying those capital gains taxes. So also in terms of stocks, you could invest on your own. I'm not going to get really too deep into, all the stocks that I hold. Some of the more popular ones that I'm taking advantage of is Apple, of course. I am heavy in Apple. I'm heavy in NVIDIA, which is a chip company. And then I have some growth stocks that I'm betting heavy on, like Sophie. And Shannon, what are you investing in right now? What stocks do you got?
I had some Sophie. I got Baba, because it was a really good play. I think it's, from a standpoint, almost like an Amazon. Even though people, they have their opinions about Chinese stocks right now, and I know the market in China now.
That's a risky one. Yeah.
Yeah, I mean, right now, the Chinese market, Chinese finances right now is really risky.
Yeah.
But I do have some positions in Baba, a pretty decent position. I'm also I got some NVIDIA. I also have what's another? I don't have any Apple. I had some Apple. Pretty good position in Apple.
You an Android person?
Yeah,
anyway,
I'm not
big
on. I'm not really big on Apple like that. But I do think Apple's a good play. But I'm also, and I understand Apple has now. I think I just heard this recently. I think on CNBC that Apple officially has passed Samsung. I think so far as the market share, which for a while that wasn't the case. They hadn't. They didn't own the majority of the market share. I think right now they actually do, which is surprising to me. Yeah. So I think Apple's a good play. I just don't have any of the stock right now. I did used to have.
You have Microsoft?
I do have Microsoft.
Okay.
I'm heavy in Amazon and Google right now.
Okay.
Those are some holding forever plays.
Yeah, holding forever, ever. So, but hold on now, because if you hold it forever. See, okay.
Well, let me put it this way. So when I buy, I buy to have some to hold and to have some to trade, right?
Okay, right.
So I'm always looking to potentially make money off of a potential gain. So almost like swing trading, but longer term swing trading. So not as short term swing trading.
Okay. Because,
like you said, it's a fire sale right now, right? Because the stock market is down. It's like the whole premise is to buy low, sell high. Most people get that. Yeah, most people. If it's a good company when the price was up, it's still a good company when the price is down. I mean, mind you, yeah, you should know a little bit about the financials, right? And speculative plays, versus growth plays versus value plays. You do need to take those things in consideration, right? And the more you start to invest, the more you understand, the more you start to invest, that you realize that, hey, I need to be able to diversify my portfolio, right? And so I've done a little bit of that. So I do have some ETFs. I got some ETFs and various ones to try to almost kind of like how you said, how do you continue to get consistent gains along with the market, right? With the S&P, right? So I've diversified a lot. I've kind of switched out my portfolio over time, and I've started to diversify. I'm not as heavy in growth plays. I'm not as heavy in speculative plays.
Okay, yeah.
And
I've
so
I've kind of steered away from overloading my portfolio with those growth and speculative plays. One of the ways that I'm learning now to trade and to day trade is using options. But pretty much when you buy an option contract, you are buying the option to buy 100 shares of a certain stock. at a certain price. And it kind of sounds complicated, but so a lot of the gurus that you see on Instagram and stuff doing a lot of day trades, and most of them are trading options. And that's one of the main things that I've been really, really studying and learning to work on to make money every day in the stock market. Like when you're doing buying the stock, for me, it may be a swing trade, but it's generally for me a long-term hold. And when I say long-term, I mean like a year to 5 years or more. But when I'm buying option contracts, I'm trying to make money that day or that week. And I'm expecting the stock to move a certain way so that I can make money off of that move that week, that day. Really, it's daily because I'm day trading, so I'm trying to make it that day. Really, I'm trying to make it in 20 minutes.
Right,
I'm trying to catch that 20 minute that certain amount of points move in 20 minutes that I'm trying to get in and out and make that money quick and going about my day. So that's the main thing that I'm really, really, really focusing on in terms of my investing right now is doing options trading. And the stock that I like the most for that is the SPY. I've talked to you about this, Shannon, just how you could kind of really just follow the pattern of how that moves on a day-to-day basis.
Right.
And try to catch that at a low point or a high point and guess either direction. What else do I do? Crypto? Womp womp.
Yeah, man. You want to talk about risk tolerance?
Yeah, risk tolerance. Well, see,
or speculative.
Well, right. Well, no. Well, it's both, right? But for me, what I'm saying, I am a gambler at heart, right? So I have a extremely high risk tolerance.
And I've always been a calculated risk taker.
Right, and I'm semi-calculated, but I'm
not really like that anymore. But go ahead.
Well, my favorite game to gamble is roulette. So it ain't. You can calculate whatever you want, but that ball gonna do what it's gonna do. So
right.
But my risk tolerance is extremely high. So it was a time when I was really, really, really heavy into crypto. And I'm not all the way out of crypto. It's definitely a very slow time for crypto. I've definitely lost money. One of the things that keeps me going is just to look at the history of stuff and then look at the history of some of the choices that, some of the gains that I did make. Like, my biggest play is in crypto. My biggest play, period. Like my biggest percentage gain in any investment that I've ever done, even better, more money than I ever made, percentage wise, more money than I ever made, at the roulette table or on any stock or option is crypto, right? So Shiba Inu, I put in $250 and I cashed out at least $4,000 and I still have, money left in there. I don't know how much. I haven't checked it in a while because it's been down, but it was one point when that $250 that I put in was worth like $10,000. So,
that's a mean ROI.
That is ridiculous. And it wasn't
return on investment.
I don't even know. That's 5,000%. I haven't ever calculated to see what it is. 250, so yeah, it up to 10,000. Yeah, that's like 5,000%. I think. This is insane, and that wasn't over a year. That was probably, I think I bought my first Shiba probably in like April of last year, and I think it had hit 10,000. Maybe I don't know. Maybe June, July, October is somewhere around there, like late summer, I think is when it got to its high, and it was like insane. But since then, if I hadn't cashed out that $250, it still would have been up, but it probably would have, only been up to like $2,000. If I would have not cashed out, some when I did, it came all the way back down. So,
right.
And that's something that I had to learn too. And I meant to bring this up when you were talking about never selling. I was like, well, if you never sell, what's the point? And at some point,
no, you got to take profit, right?
Right.
And you should know what that price point is. You should know when you are going to take profit. So I shouldn't have said never.
Right.
But yeah, I mean, absolutely. The whole point is to make money. Right. That's the whole point. Right.
And that's something that I had to learn, right? Because you kind of get overcome with greed, optimism, and expectations. Is that, you like, it's going up. It's like, well, if I cash out, I'm gonna miss out on it going up some more. And this is really, really important when I'm doing the day trading with the options, because just as fast as that price has shot up, it'll shoot back down, and you may go from a winning trade to a losing trade in a matter of minutes. So, with crypto, with options, and I guess even with general investing, you kind of have to go in there and be disciplined on your entry and exit. One thing that is, strange about this crypto space is that everything follows Bitcoin, right? So as Bitcoin increases, then the money pumps into the alternate coins. So,
But the strange thing though, Max, I'm glad you mentioned that. So all the other coins, to include your altcoins, you're right, are following Bitcoin. But what is Bitcoin also following? For the most part.
What, the
market? The
right.
market. And the whole thing it was intended to not do that.
Mm-hmm.
So what does that say?
Well, that tells me that the big boys are in. Right? So all the big money is in both places. It's in the stock market, and it's in the crypto space. Even though, as a retail investor, the idea was that this DeFi space or this crypto space was a way to, kind of avoid them. Avoid regulation and all that sort of stuff. But if those boys, the big boys, are playing in the same space, it's like, you can't win. And that brings us up to, what other thing we were talking about earlier was what happens when the government decides to create their own cryptocurrency. Which you mentioned to me that you heard that the White House had mentioned that they are putting out the framework for a U.S. based digital currency.
That is correct.
Yeah. So what do you think about that?
I just think it defeats the whole purpose for what digital currencies were originally trying to accomplish, right?
Yeah, that's not what Satoshi had in mind.
That is not what he had in mind. Not at all, right? Yeah. And so I don't know. I think it's causing a lot of people to be a little, well, not a little, but skeptical, a little antsy. Those who were big time crypto believers, huge in digital currency, as well as NFTs, right? Because we ain't heard nothing about any NFT projects. And so, you have whole countries that decided to get rid of their currency, not saying, from an exchange rate purpose. I don't know that was advantageous for them, and went totally to crypto. Yeah, specifically Bitcoin. I want to say wasn't it like Venezuela?
I think it was Venezuela. It was some Central American country. And the bad part is that they did that at the high when Bitcoin was 64,000. I'm about to look it up too.
You can't even. I was watching something the other day, and I'm sorry, I should have actually checked. I mean, it was a reputable source. It was. I don't think it may have actually been CNBC. By the way, I watch a lot of CNBC. But where they were talking about how
El Salvador is the country.
Oh, there we go. Yeah. Thanks for looking it up. Yeah, because I was getting ready to do that because we ain't got nobody in the back looking it up for us. So thank you. But yeah, we doing our own producing here. All right. So no. But yeah, they was talking about how you walk around El Salvador. Don't nobody. They like you better not mention all that fucking crypto around. Oh, I can't even say that. But we'll bleep it out later. But you better not mention nothing about no crypto around here because it devastated their economy, right? So right now, and look, I get you being an optimist, and I'm not saying, right? So if we had a crystal ball, I'm gonna take you back, right? So we talk a lot, we've known each other for years, right? I want you to think back when we were in the Howard University School of Business, and I want you to think about all the companies, right, that got their start while we were in school. You remember when we were in school, the number one internet provider was who? I'm going to throw them out. AOL, Netscape. Wow. Netscape specifically, right? Right. And then came this thing called Google.
Right.
Man, who knew that Google would be what it is today, right? And so there's always going to be companies that come along and people don't necessarily see the vision, right? They don't see what something is going to be or become. Much like how when Apple made a comeback, nobody thought that Steve Jobs was going to revive that company the way he did, right? Nobody thought that. People laughed at Elon Musk. When I remember being in Howard, and I remember this little car company in California who he was working on this electric car, him and his buddy, and I remember they used to laugh him out, right? Who knew Tesla would be what Tesla is today, right? And so sometimes it's about a gut feeling. Sometimes it's about knowing an industry or feeling good about something, right? And you're willing to go ahead and invest because you feel it's going to be life-changing for your future, right? That's great to feel that way, but again, we talked about risk, right? So don't put in more than you are willing to lose,
right?
Or that you can afford to lose,
right?
Right? I mean, over the years, we've done some business ventures and done some things that we put all the chips in, right? And hey, sometimes it's successful and sometimes it's not, right?
Right.
And so yeah, I mean, the way I feel about crypto, I know I kind of went on a tangent just now, but the way I feel about crypto is I do believe that there is going to be some value as it relates to blockchain. I think blockchain from a security perspective is going to be used and utilized. How it's going to work for all of our all of these various cryptocurrencies, and whether or not most of them will even survive. If you have governments now trying to establish their own digital coins, to me that says heavy regulation.
Right.
To me, that means there's not as much fluctuation in price. And to me, they look more like stable coins than they do anything else. So that's me personally.
Yeah, I agree.
I'm not saying I wouldn't necessarily, get into any more crypto projects or maybe not, invest in any more crypto. I'm just not invested in any of that right now, me personally. That's just me. So that's kind of my take on it. Yeah, you and I, we've lost money in projects, crypto projects, right? We've also made money, right?
I'm up overall, but sometimes when I think about the money that I have lost, it does hurt my feelings, because but it's a learning experience. I just feel like I get better in terms of finding the right projects to get into, finding the right investments to get into, having, like I said before, having a mix of those growth stocks or those heavy risk stocks versus those stocks or investments, which is another reason why, real estate is a little bit safer. And like you talked about earlier, you got to diversify. So you got to be, have a wide spread of investments to kind of cancel out some of the risk and some of the loss that you may get hit on in some of the things that you invest in. So.
Right. But yeah, although we've had losses, we've also had some gains, right? We've had some wins. We've had more than some, right? So we have made money. Right. And it just means, sometimes like who would have predicted there would have been a pandemic that lasted this long, right? Who would have predicted that all of the effects of that pandemic, from supply chain to to who would have predicted the storm that was made? Oh, by the way, and then there's a conflict going on. Like who would have predicted all of this? Pretty much this perfect storm that brewed up. And oh, by the way, people walking away from jobs, right?
Yeah.
So
it's like people are fed up with working.
People are like, I'm not working. I'm good. I'm making my money the best way I can. Yeah. I'm working DoorDash. I'm doing Uber. I'm doing a podcast. Whatever the case it may be, and so that also creates, because there's still money circulating out there, right? It's just a perfect storm. It creates a situation where inflation is hot. We talked a little bit about that in our first episode about inflation and how the housing market's affected by, and interest rates going up and all of that. And I do think, because you do have these big, hedge funds and, all of these capital groups and all of these people who make big plays, and they got to make money for their stockholders, right? They're trying to make those folks money. It's just right now the market is reacting to this perfect storm, right? And so and I think that's even as it relates to the crypto market, because we just talked about how crypto is moving directly. I mean, literally, if you probably were to look at the charts, it's moving with the market, right? And so eventually I think most of this stuff will bounce back. I mean, in some cases, most of the crypto, the ones that are worth their salt are going to last, and the ones that aren't, they won't.
Right. Yeah. I'm just trying to be in there for the ride back up.
Right. And so
be in the right place for the ride back up. So
right.
It'll come. And I just hope that this ride, I hope this dip, like we was talking about this before, like you buy the dip and it just keep dipping. It's like, I just hope the dip stop dipping. And
this Big Dipper is
we've been dipping for 10 months at least.
This Big Dipper, this Big Dipper is not in the sky. This Big Dipper is definitely subterranean. It's below it's below sea level, way below. Right? It's not even the worst that it's ever been historically. I do think people are trying to compare it to 2008. In some aspects.
If you look at the charts, it's very similar to the charts of 2008.
Right. And so people are trying to really predict, how long will this last? They say bear markets, 18 months, right? If we really are in a bear market. But there are a lot of people I've heard, again, I told you I'm a heavy CNBC watcher these days, but I've heard that, and there are multiple analysts who see this thing kind of differently. Some say, hey, all of the economic indicators show that we're not going to be in this very long, right? It's just, right now people are reacting to old Jerome, Jerome Powell, and the Fed just saying that they're gonna, they're gonna ride this out, make sure that they get inflation. And get the interest rates where they need to be to try to get inflation down. And so, I don't know. We'll see. Some people say 18 months. Some people say we'll come out of this by the spring, by April. Like, to me, the best way right now, again, none of this that we're talking about is investment advice, right? We're sharing our experiences based on stuff that we're actually doing as ways to either continue to try to build wealth, to set ourselves up to get into some positions for plays, so that we can potentially make money off of the downturn of this market, or in this case to try to, which what I'm going to talk about a little bit with what I'm doing. In addition to stocks, I do have some option plays. I got some crypto, but I ain't got a whole lot. But and right now I don't know how much it's worth. But but just to do some things to try to hedge against inflation, right? So I think inflation right now, it's been fluctuating, I think, between 8.1% and 8.3%. As a matter of fact, I think the most recent one was 8.1%. They thought it was going to go down to 7.9%. And because it didn't go down those extra couple of percentage points, everybody got spooked or whatever. But ways to kind of mitigate that is to potentially do some alternate investing. And so, or alternative investing. And so there's a few of them that I'm in. Like, for example, I use or I invest in Ground Floor, which is a short-term high yield investment. And what that pretty much is, it's a platform that allows you to lend money to people who are either trying to renovate homes, they're just trying to do some flips, rehabs. And so you can lend money based on, and they have different, when you go on the platform, they have like different types of loans all across the country. They have terms, and the reason why I said it's short-term high yield, because the terms can go anywhere from the least amount I've seen is like 5 months. The most I've seen them go out to, I think, is like 15 to 18 months. But you're able to get at a minimum 10% return on the money that you loan for this person to do this return. Fix, flip, rehab, renovation. And so it's a real estate investing platform that allows you to make at least 10% off of your investment. So the ROI at a minimum is 10. I've seen some of them get as high as 15%. So I heavily put money into Ground Floor. As a matter of fact, I had this set up on a reoccurring investment. And so I go in twice a month and I select which projects I want to lend my money to. And they vary. Sometimes I do get the 10%, depending on what loans are out there that people are looking to receive money for. And sometimes I've been able to get or lend money on as high as 15%. And as I said, some of them are as short as five months. And so I get that money back. And what I continue to do is just keep reinvesting it. Mm-hmm. So overall, you wind up with, your average rate of return, as long as it's above 10%, you're beating inflation. Right. Another one that I use, which is Amazon backs it, or another one that I invest in is an Amazon backed platform. Mm-hmm. Again, this is just us talking about our investments and what we're doing. We don't have no affiliates. We're not trying to promote anyone. We're just throwing it out here that there are other alternative investments that are out there to diversify your portfolio. And so Amazon partnered with this company called Arrived Homes. They're actually a part of some companies that Amazon has worked with. And Arrived Homes is a platform that allows you to pretty much own shares of single-family homes. They started out with single-family homes. The homes are all across the country. They do the due diligence and they find the homes. They rent the spaces out for you, and you receive a dividend on the ownership shares of that home. I think it's a really good way to also, I've seen in rates of return as low as, I think I've seen some as low as like 5%. And I've also seen some where they predict that the rate of return could be as high as, I think the highest one I saw was like 12%. So again, just another way to beat the inflation. They recently released, they started like a couple weeks ago, where now you can actually own shares of vacation homes. So they just recently started populating vacation homes. So personally, I own some shares of some of the residential homes, as well as some shares of the vacation homes on the Arrived Homes platform. also have been really big on, we talked about this, Max, before. We talk about how do we start our own venture capital company, because I do think it's important to invest in small businesses and startups. Some of these companies who eventually wind up, having IPOs or becoming IPOs, which right now the whole IPO market has really slowed down. But I believe it's very important to get in early with some of these companies. And so there's a few companies that or let me back up. There's a few platforms that you can use that, a lot of these alternative investments alternative investment companies are trying to make it a little easier for people to be able to get in with some of these startups. So I'm not in all of these. I'm naming some of them, but you got Start Engine, you have WeFunder, you have Micro Ventures, you have Seed Invest. There are so many of these kind of micro investment companies, if you will, that allow you to invest in early stage companies. Right. And where a lot of times we don't get the opportunity to do, especially if you don't know where to go or if you don't meet the threshold, right? Because you have accredited investors versus non-accredited investors, mm-hmm. right? And so accredited investors typically, I think, are people whose net worth is more than $200,000. Sometimes it fluctuates depending on the platform of what they would consider as an accredited investor, but for the most part, it goes upon your net worth. And then you have non-accredited investors, right? And depending on how much you make, they do the calculations to see how much you can actually invest as a non-accredited investor. But either way, it's still an opportunity for you to get in early, own some shares of a company that may actually wind up being the next DoorDash or Uber, right. Or, again, going back to the whole Google analogy that I gave earlier, the Tesla analogy and the Apple analogy as well. Sometimes you just don't know, right? And so if you have, and in my case, there are some companies that I have invested in, because I did have money that I was willing to risk. And in these plays, for the most part, you're playing the long game anyway, right? You're playing the long game, saying, hey, I'm willing to put this money here because I believe, 5 years from now, 10 years from now, I'll get a return on my investment, right? So that's just some of the stuff that I'm doing so far as alternate investing. I was able to get in early on another investment, Dream Exchange. And so Dream Exchange, which is going to be the first minority owned or first Black owned stock exchange, which is going to be huge, I think. And so I was able to get in early with that. A little while ago, a little over a year and a half ago. So hopefully that plays out, but I was fortunate enough to get in early with that. It doesn't happen that often. And I'm one of only 125 investors in a company.
Okay, that's good.
Yeah. So we'll see how that plays out. So, that's good. I mean, we was able to kind of give a rundown on just some of the investments that we're in. There'll be more episodes where we'll talk about more in depth about some of the things that we're doing, and kind of give some updates too on some of the things we're doing so far as from an investment standpoint. So investing is just one part of the whole wealth initiative that we're on, and we'll be sharing a lot more of what wealth means to us and some things that we're doing so far as building that wealth. And Max, what you have for the travel tip today?
Some tools that I use to find cheap flights. You never want to pay too much for your flight, so I always do a little research before I buy my flight. And these are the top 3 tools that I use to make sure that I'm not overpaying for my flight and getting a good deal. Number 1 tool I use is the number 1 search engine in the world, Google Flights. Google Flights is your friend. You don't even have to purchase from Google Flights. Google Flights will just give you a list of the prices, and you can sort it, from high to low, from low to high. You can use filters, like if you just want to fly first class, if you want to find stops that have no layovers, nonstop flights. And after you find a good flight, you press the link and it'll take you to the website to buy the flight. Number 2 that I use is Hopper. Hopper is an excellent search tool for finding cheap flights. They will let you know when you put in the dates that you want to travel. They'll let you know if that's a good time to buy right now or if you should wait, and they think that the price of the flight is going to go down later. Hopper also will send you notifications, like when your flight does become a cheaper price. They'll send you a rate and they'll say, like, this is a time to buy. Your flight from X, Y to Z is now $100 cheaper. Buy it now. They also do something cool. If you put in your destination where you want to go, they'll give you a calendar, right? So you'll see a green, yellow, and red in the calendar, and that tells you the low, medium, and high prices to fly during that time. So if you pull up a calendar now, let's say, the next week is green, that means that's the cheapest time to buy the cheapest dates to buy that flight. So that's if you don't have a specific date in mind. That helps you kind of plan if you want to try to plan for the when you could travel XYZ for the cheapest. Okay, so the third tool that I use is Skyscanner, and Skyscanner is very, very cool. It's one thing, like if you don't have any idea where you want to go and you're just like, I want to go somewhere cheap, you can put in, like, let's say you're leaving from DC, you can put in DC as your city, and in where you can put everywhere. You can search for a whole month, and it'll tell you everywhere that's has deals or the cheapest places to fly from your destination for that month. So I use this all the time if I'm like, oh, I want to go somewhere in November. I don't know where I want to go. I just want to go somewhere cheap and far and hot. I'll put it in Skyscanner. It'll give me like Puerto Rico or Mexico or whatever is cheap during that time. And then it'll take you to that website to look at the best deals. So those are 3 excellent tools that I use to find cheap flights: Google Flights, Hopper, and Skyscanner. All right, Shannon, have you ever used any of those?
I've used Google Flights.
Okay.
I've used Hopper at one point, and I haven't used the scanner, the Skyscanner.
You got to check that out. All 3 of them together, that's the trifecta. You got to use all 3.
Yeah, but I've definitely used the other 2 for sure.
Okay.
For sure.
Okay.
But all right then. I mean, I appreciate you saying that, because I don't know. I need to plan a trip.
Yeah,
I really do. I'm overdue for a trip, so I'll add in the third one since you said it's a trifecta. I'll check that one out. I will. Okay. All right, so that wraps up our second episode. We really do hope that you were able to maybe get some nuggets from some of the stuff that we talked about as it relates to investing. We know we talked about a lot there. And some of it may have been a little lengthy. As I said, we'll get into more of those investments and even give some updates in some future episodes. In addition, we just want to thank you for tuning in. We understand that there are so many podcasts and so many platforms that you could be listening to. And we just appreciate you really taking the time to listen to us. So with that being said, we need you to subscribe, like, follow, and share so that you can get back to us much easier next time. You don't want to lose us in the shuffle with all of the podcasts out there. So you definitely want to make sure that you can get back to us. And we also want you to definitely come back for our next episode, which we'll be talking about, speaking of traveling. Somebody's going on a trip here soon.
That's right.
And
listen, I'm always going on a trip. So.
Max is going to share some information about Paris, why she's going to Paris. I personally have been to Paris. We can chop it up on some of my experiences from going to Paris, and she'll be going to Paris for the first time. And so definitely come back and tune in for that. We got I think I got some maybe a few funny stories to share about that as well. But definitely come back and join us for that. We really do appreciate you. And so you definitely got to come back so we can show you what we got in our bag. All right. Everybody take care, and we'll see you next time. The information expressed is for entertainment purposes and is not financial advice.